There's been a lot of discussion about whether China's even investable. I'm in the camp that believes that it is.
If China had a hard landing, that would have very serious consequences for the rest of the world and for the United States.
40% of our capacity and our revenues are, 2019 were destined to and from the U.S. So it's fantastic news for our group.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on Tuesday, 21st of September. I'm Francine Lacqua here in London, and here's what's coming up on today's program. S&P warns an Evergrande default is likely. The Chinese developer tumbles further in equity and credit markets, fueling concerns about broader contagion. The U.S. is lifting its travel restrictions, while anyone who provides proof of full vaccination will be able to enter the country from November, with stricter rules in place for the unvaccinated. And gas prices surge 16% in the UK as Russia keeps the lid on supply. The British government says it expects some power companies to go bankrupt in coming weeks. Now, first thing is first, we have a lot of stories, and of course it's all playing out in the markets. Now, Evergrande, left, right, and center. Yesterday we had a big sell-off also in Europe. Today, investors actually focusing on the positive. So part is buying the dip. I know our Eddie van der Walt was all over questions about whether it was a good time to come into the markets. And you can see 1% higher. Evergrande still at the forefront of people's mind, but maybe we already saw a correction that's been priced in the markets, the DAX, and you can see the S&P futures also gaining in 1%. Now, the other thing, of course, is iron ore. This, again, goes back to FOMC, partly the worries that we had last week about early tapering have now faded a little bit. And you can see we see a lot of green on the markets. The UK, the CAC 40 over in France, FTSE MIB and DAX gaining between 1 and 3%. The DAX, one of the biggest gainers, and it's really media giving a lot of the lift, basic resources as well to some of these stocks. Now, the Evergrande meltdown continues as a Chinese developer slid deeper in equity and credit markets. S&P Global Rating has said that the property giant is on the brink of default, but major players such as George Soros, Ray Dalio, and Cathie Wood are mixed on investing in China. Well, joining us now is Bloomberg's Chief Asia Economics Correspondent, Enda Curran. Enda, always great to speak to you. What are economists now saying about how this will play out? Will the government intervene or not?
Well, I think, Francine, everybody's waiting for the next play on this. Like you mentioned, S&P making the warning there that they expect the government to step in if this contagion starts to spread beyond Evergrande and into the broader real estate sector. We had some communication from the company today via letter from the chairman that was picked up in the Chinese press, and he was making the point the company will put out of its darkest hour soon, and he said they will accelerate on with their construction plans. But nonetheless, I think investors and economists are waiting for clarity. There are some interest payments due this week. That will certainly send a signal as to what's next on the agenda. Things have been complicated a little bit this week by a holiday in China, so we'll have to wait and see until officials get back to their desk in terms of what signal they're going to send. But I would say there's been a lot of commentary today, certainly highlighting the warnings and the dangers from this development with Evergrande. But lots of economists are also making the point, Francine, that it's not a Lehman moment for China.
So when you think about it, and what's the incentive from the government not to try and support it? And are we likely to hear anything from policymakers?
Well, it's been something of a void on the policy front because we haven't had much, if any, real commentary from the government on Evergrande. And of course, the market is very happy to fill that void in the meantime and send the signals that it wants to send. We had some fairly modest action from the central bank last week when they put money into the financial system, but that was also reflecting seasonality. Nonetheless, though, there's an expectation that the policymakers will have to come to the table on this. They probably won't want to call it a bailout. It won't be dressed up as a bailout, but most people are expecting some kind of restructuring. And I think it's a question of how much pain they're willing to allow both Evergrande to feel on this, and of course how much pain they're willing to spill over into investors and others. But it's a complicated story. You know, you're talking about people who've bought houses that they expect to be built by this company. There are those who have bought wealth management products that expect to have their savings repaid to them. So I think it's going to be, at the very least, it's going to be a long and complicated workout, however this does play out, Francine.
Thank you so much. And our chief Asia economics correspondent, Enda Kern, of course, who will bring us up to date almost bit by bit on what we're hearing and seeing from Evergrande. Now, we're joined to talk about the markets by Max Kettner. He's multi-asset strategist at HSBC. Max, as always, also thank you for joining us. When you look at Evergrande, some of the concerns that actually, it could default, it could have wider implications for markets as a whole. How much of the bad news, if authorities don't intervene, is already priced in?
I think an awful lot, actually. So when we look at, for example, from a global perspective, things like equities over bonds, things like cyclical equities over defensives, but even other asset classes like risk on FX, like credit, for example, so high yield over investment grade credit, all of those actually are pricing in quite a sharp slowdown, both of growth expectations and also of outright growth data. So in actual fact, I think it's quite clear that markets and investors have become actually maybe perhaps a little bit too pessimistic already. And I'm absolutely not in the camp to just throw in the towel now. I think this is a dip you want to buy. Sentiment and positioning has been pretty neutral anyway up until last week, and it's just become a little bit more bearish in the last 2-3 trading days in addition to what we've seen before. So if anything, I think there's a great deal of pessimism already priced into markets.
So, Max, what does it mean to what you want to buy? Are you going after cyclicals? Are we going for the reflation trade? How will it play out? And what dip do you buy?
I think cyclicals is a little bit too early still, because when we look across asset classes, it's clear that most pessimism is priced in things like FX, like credit, for example. In cyclicals versus defensives, for example, in equities, what we are seeing is that there is a bit of pessimism priced in. There's a bit of a further slowdown and a further downward momentum in growth expectations priced in, but it's not yet uberly pessimistic. So I'm waiting for that uber pessimism being priced in. Everyone sort of throwing in the towel on growth expectations. That's on the capitulation. That's when you want to buy the cyclicals. I think what you want to do right now is just still stick to growth and qualities, stick to the US, stick to the large caps in the US. But even if you look in Europe, for example, things like REITs, for example, have massively underperformed in the last couple of weeks, even though actually growth expectations have gone further up. So they are definitely worth a look as well.
So I'm not 100% sure, Max, what to do about the U.S. right now because of the debt ceiling that seems to be largely ignored by the markets. Is there, again, a belief that actually things will work out, or is it just being mispriced at the moment? And what are you expecting from the FOMC this week?
Yeah, on the first question, I think it's one of those risks that are good enough for a sort of a 2-3 day dip. But it's another one where you say, well, this is a dip you will then want to buy again, right? Because it is not going to materially alter the global growth picture, let alone the US growth picture. It is something that could be sort of an intermittent issue, an intermittent sort of bearish issue that might send markets temporarily for a week or so downward, but it's definitely not something that is going to flip the overall growth picture upside down. So that's why I'm thinking actually markets are right in largely ignoring that on the risk asset side. That's number one. Number two is on the FOMC. Our economists expect, particularly in the dots, a couple of changes, one hike for next year, and then 2 for 2023. And then additionally, we get the 2024 dot, but we're looking for one further hike in 2024. And I guess that's the sort of near-term risk tomorrow, that if really the FOMC is signaling perhaps 3 or let alone 4 hikes in 2024, if they really spring an uber hawkish surprise in the 2024 dot, that's where the risks for DM sovereigns lie. I would attach a fairly low probability to that, but that's the risk. But I think once that is clear, I think, after tomorrow evening, UK time, then we'll probably have most of the worries cleared, and it's definitely buying the dip territory again.
Thank you so much, Max Kettner, there, a multi-asset strategist at HSBC, joining us this morning. Now, up next, surging energy prices in Europe is causing chaos. The attention turns to the role of renewables. We discuss that next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquay here in London. Now, here's what's happening today. The UN General Assembly begins. The Gas Tech Conference in Dubai begins and brings together participants from global gas and energy industries. It couldn't be more topical. We'll also get updated forecasts for major global economies from the OECD, and the Greenwich Economic Forum will include speakers such as Bridgewater's Ray Dalio and former Fed Chair Alan Greenspan. So, surging energy prices in Europe, we talk about it every day, causing chaos and turning attention to the role of renewables. Now, wind speeds in Europe have been below average this year, leading to a greater reliance on natural gas. That, together with global supply crunches, has pushed gas prices even higher. As a result, dirtier coal power plants are coming online, while some of our guests weighed in on the crisis.
I think we may still see gas prices a bit high for the next days or weeks to come.
What we're seeing in Europe right now is wind and solar are great, but if the sun's not shining or the wind's not blowing, you need to have, people still need electricity.
Unprecedented times. So basically, we've got low gas coming into the UK. We have very low wind output on all the sort of renewable side of things.
Most important factor here would be in the short term how the winter conditions will be.
It won't only be of recessionary value and have economic considerations. It will also have the ability to affect the ability to actually provide gas for heating. And in a cold winter, when you have to ration gas for heating, that is something that's not just about geopolitical games or markets. It touches everybody's lives.
If we don't start to remedy the situation, we are going to be facing blackouts this winter.
Now, for more, our renewable energy reporter, Will Mathis, joins us with the very latest. So, Will, I mean, there's so much at risk here for consumers, inflation, just people not being able to heat their home. To what degree are we going to be, have to get used to these higher prices in electricity and gas?
Well, we're going to have to get used to it for this winter. The gas shortage is not going to be alleviated this winter, it looks like. I mean, that could change, but that's what we're hearing. And it also really depends on wind, like you were saying. There is this global gas market issue, but at the same time, here in Europe, there have been unseasonably low wind speeds. And generally, the winter is the windiest part of the year. So if coming into the winter months, the wind picks up and really supplies a big part of the power mix, that will reduce the demand from the electricity sector for gas, and that could help alleviate those prices a bit. So We're really dependent on the weather coming into the cold months.
Well, are renewables going to be a problem going forward in the energy transition? I mean, what I hear is that you also need some of the components actually to make, it's not renewables, it's not just wind and air. You need components to be able to make the machines that then use wind farms and things like that.
Yeah, I mean, wind turbines are big pieces of steel. That takes a lot of energy to produce. But, overall, the carbon intensity of a wind turbine is much less than over its lifetime than any fossil fuel power plant. And, it's no surprise that the wind doesn't blow all the time or that the sun doesn't shine all the time. So these are issues that have been known about. Everyone knows that we can't rely 100% of our electricity on renewables. So there need to be other technologies that balance those out and that can support renewables when the weather isn't providing electricity.
Thank you so much, Will Mathis there, our renewable energy reporter. Now, up next, the Bloomberg exclusive, Ireland's Prime Minister tells us that he's supportive of a global tax deal, but isn't ready to sign it yet. Our interview with Micheál Martin, that's coming up shortly, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquay here in London. Now, world leaders are meeting in New York for the 76th UN General Assembly. Climate high on the agenda, where efforts are being made to get countries to agree on bolder commitments ahead of COP26 in November. Now, Ireland's Prime Minister Michel Martin spoke exclusively, Michel, to Bloomberg about solutions to the climate crisis. Here he is.
I think the key agenda item for Ireland on the energy front is wind, and we've been great developers of onshore wind. The next decade in Ireland will be offshore wind, and we have streamlined our planning application framework for investors so they have certainty in terms of applying to invest in terms of offshore wind infrastructure in Ireland. So that will be a key agenda item of ours, and renewables. We have a very strong climate component in our government and in our government programme, and that of course is not disconnected from the energy agenda, and there will be challenges of that, there is no doubt, but we are making considerable progress.
Are you worried about the here and now? Are you worried about blackout risks? Are you worried about the amount of consumption data is taking up in Ireland?
Data is taking up considerable demand in energy terms, but we have been robust in terms of meeting that to date, and I'm confident that we have the right mix to maintain that sort of robust response. I mean, for us, the two key pillars of the next stage of economic growth is digitalisation and climate and the green economy. So our investments are targeted as we emerge from COVID towards the green economy and towards digitalisation. And we've got to try and marry the two in respect of the various challenges that will arise from them. And COVID has taught us many lessons and has accelerated some of the push on the technology front, particularly in terms of the delivery of health services. And also, we think, has given people a closer connection with nature and an appreciation of existential threats. That COVID has created that in terms of a pandemic and a virus. People now have a greater, I think, understanding of how near now that existential threat climate change represents than perhaps they may have had prior to COVID.
So talk to us about net zero by 2050. Will Ireland achieve it?
Yes, and we've passed a climate law in Ireland, which sets very ambitious targets of reducing emissions by about 51% by 2030 and net zero by 2050. And that is a very strong commitment of ours across every sector. And by the end of the year, we will be publishing carbon budgets for each individual sector, from transport to agriculture and to industry. And we have to move fast as a country, and we have set very challenging targets, but we are absolutely determined with our European Union colleagues to achieve them.
Let's talk about the digitization focus then of the economy. How important is your 12.5% tax rate for digitization, for the fact that it helped lure Google, Facebook, so many key technology companies to want to put their headquarters, European headquarters in Ireland? Are you committed to that 12.5% level then?
Well, first of all, it has been a very important part of our broader range of tools to attract companies into Ireland, but it's more than that, I have to say. I think the human capital in Ireland has been a very critical part of those companies' success stories, both on technology and indeed in the life sciences as well, in advanced manufacturing and so on. And we've built up a lot of strengths in that area, and also in terms of our migration approach, being part of the wider European Union, we have a large talent pool of people who want to come to Ireland to live and to work and to enjoy good quality of life. That's very important for the Googles of this world, for the Amazons and the Apples and so on like that. And remember, Apple came in the 80s, have transformed just like they've transformed in America, they've transformed in Ireland as well, and play a huge critical role for its European and EMEA operations. But on the corporation tax, we're part of the OECD process. We've engaged in that process constructively, have been since 2013 with the BEPS process. We haven't joined the consensus yet. We've remained one of 6 countries. We've been broadly supportive of the process, but haven't signed up to the consensus yet because of some aspects of it which we believe do not give certainty or continuity. And in terms of those companies you've mentioned, and indeed others, overall what they require is certainty into the future.
Well, the Irish Prime Minister there, Micheál Martin, speaking about net zero targets, the green economy and big tech to our Caroline. Hi. Now let's get straight to the Bloomberg. First for news, here's Laura Wright. Hi, Laura.
Hey, Francine. Canadian Prime Minister Justin Trudeau is poised to win a 3rd term, according to broadcasters CTV News and CBC News. The two networks say they are projecting the governing Liberals will win most seats, but fall short of regaining the parliamentary majority he was seeking. US House Democrats have unveiled legislation to fund the government until year end and suspend the debt limit through December 2022. It's part of a must-pass spending bill needed to keep the government open past the end of this month. The risky move aims to pressure Republicans who've pledged to vote against an increase in borrowing limits. The US will soon open air travel to most foreigners as long as they are fully vaccinated against COVID. The new rules will replace the current system, which currently bans non-Americans arriving from places including the UK, Europe, China and India. The policies are expected to start in early November. Airline executives praised the move. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Thanks so much, Laura. Now, this is what the markets are doing. A lot of the focus is actually on the positives out there. It's a nice change from yesterday's red. So we did see a sell-off earlier on in Asian stocks, and that moderated. Traders, again, assessing the risks from China's crackdown on the real estate sector, looking ahead to the Fed this week. And we're looking at some of the individual stocks. Now, coming up, the global stock rout easing off. This is Bloomberg. S&P warns an Evergrande default is likely. The Chinese developer tumbles further in equity and credit markets, fueling concern about a broader contagion. The U.S. is lifting its travel restrictions. Anyone who provides proof of full vaccination will be able to enter the country from November, with stricter rules in place for the unvaccinated. And gas prices surged 16% in the UK as Russia keeps the lid on supply. The British government says it expects some power companies to go bankrupt in coming weeks. Good morning, everyone. I'm Francine Lacqua in London. Welcome to Bloomberg Surveillance Early Edition on Tuesday, the 21st of September. Now, the Evergrande meltdown continues as a Chinese developer slid deeper in equity and credit markets. S&P Global Ratings has said that the property giant is on the brink of default. But major players such as George Soros, Ray Dalio and Cathie Wood are mixed on investing in China. Our chief Asia economics correspondent, Enda Kern, is for us in Hong Kong. So, Enda, thank you for joining us. What's the latest expectation for the policy response to Evergrande?
Well, I think everybody's waiting for clarity on the next play, Francine, as to where this goes next. You mentioned S&P warning, for example, that if there is a risk of widespread contagion, they expect the authorities to step in. We had some communication from the company today via Chinese press making the point that the company will pull out of its darkest hour soon enough, and they say that they will get back on the road to constructing those buildings that they've promised to make. But I think a lot of economists are gaming out where it goes next. There are those, of course, talking about pretty bad case scenarios whereby there's a spillover to the real estate sector and the real economy. But I would say consistently a lot of economists also make the point that this doesn't pose the same systemic threat as Lehman Brothers did to the US and global economy over a decade ago. So a lot of economists are saying some kind of restructuring is coming, but it won't be on a scale of like we saw during the global financial crisis.
And what's the biggest risk to the market right now? Is there anxiousness actually in China that this could be, if there is a bankruptcy, it could be wider than expected?
Yeah, I think there is a lot of concern, Francine. We haven't actually heard anything from the authorities yet. That's been complicated somewhat because it's a holiday in China at the moment. But that means there's a void, and the market is very happy to fill that void with its own theories and speculation as to where this goes. We know it's a company with $300 billion worth of liabilities. We know that it's under a lot of pressure. It has said as much, and that it has appointed the kind of restructuring advisors that really come in at a pretty serious during serious crisis. But we don't quite yet know how far the policymakers will allow this to go, how far they will allow pain to be inflicted on Evergrande, to teach a message to it and to everybody else, or what point they will step in and put a floor under what's happening. Whatever they do, it probably won't be called a bailout. They certainly won't want it to be seen as a bailout, but they probably will come in at some point, economists say, to ensure that there's enough of a balance between investors and companies learning the lessons that China is deadly serious with clamping down on financial risk, while at the same time ensuring this doesn't spill over and cause wider contagion in the real economy.
And when do we know, and this is the million-dollar question, when do we actually find out what the Chinese government wants to do with it? I know Thursday is crunch time because their liability is coming to fruition, but do you have any indication of where we're settled either way on whether they want to intervene heavily or not?
Yeah, well, those interest payments, Francine, will certainly be one benchmark to look towards. We'll have to see, first of all, whether those payments are made or if they're not made. Then, of course, we'll have to see what the market reaction is. It's less about the market reaction in terms of Evergrande's own securities. I mean, that's already priced in pretty worst-case scenarios. It's more about what happens on the Hong Kong markets, on the broader Chinese markets, and then, of course, globally. There's a feeling that, you know, the more contagion that there is on this, both for China's own domestic economy and financial system and globally, that will pressure the authorities to come in. They haven't yet signalled, they haven't given us really much of a public signal as to what they will do, Francine. The central bank did put money into the system last week. That was seen, though, as much of a seasonal thing as anything else. But the view among many observers watching this is that the deeper the pain on this, the more widespread the contagion, not just for China's financial markets, but global financial markets, then the greater the urgency that the authorities will come in off the sidelines and do something. And I will say, Bank of America made that point this afternoon in their own research note. They said they've been surprised the authorities haven't come off the sidelines just yet with broader policy support, but that policy support is still likely to come before the end of this year.
Enda, thank you so much. Our chief Asia economics correspondent there, Enda Curran. Now, crypto extends its slump. Bitcoin falls to its lowest level since August. The second biggest cryptocurrency, Ether, retreated to around $3,000. Now, the global sell-off in riskier assets took the overall value of digital tokens back below $2 trillion. Now, to talk about crypto, but we'll also touch on renminbi because of Evergrande, we're joined by Jane Foley, head of FX strategy at Rabobank. Jane, I want to talk about crypto. I want to talk about, you know, some of the underlying causes of some of the price swings. But first of all, what do you do with Evergrande? Does it move renminbi? Does it actually move dollar?
Well, again, as we were hearing, Enda, I think this depends on the degree of contagion that we get. Now, we've seen a lot of economists over the last day or two suggesting that this isn't the Lehman moment for China. There will be some support from the authorities. Now, that is an assumption, and I think this is probably why we've seen stock markets, for instance, now ticking up again this morning. But we don't know. We don't know to what degree of support the authorities in China will give, to what degree they will prevent contagion. I think over the next few days, perhaps we'll know more. As you pointed out, Thursday is a bit of a crunch day because there are some interest payments due from Evergrande. And will they cover them? Will the authorities step in that day? Will the end of the holiday in China bring that intervention that many people in the market are expecting? So in a way, this is the signal. Now, clearly, as we had Enda saying, that the authorities aren't going to come in and completely bail out Evergrande. There will have to be some pain in the market. But I think if they manage to stop the contagion, many investors will be quite happy with that. Investors, of course, not in Evergrande debt. So I think by the end of the week, we will know. But certainly this morning, investors are feeling just a touch more confident than they were overnight.
Mm. Yeah, they certainly are. Jane, what's most exciting at the moment in the FX space? So I know you also cover Bitcoin, which I'm dead excited to talk to you about. But if you look at, MPC on Thursday and your calls on sterling, could we see a surprise?
You know, I think the Bank of England is going to be really interesting, maybe not just this week, but really into the end of the year. Now, we've had some speculation that perhaps they could edge a little bit to the hawkish side. After all, we had that pretty strong CPI inflation print for the UK, and they were a touch more hawkish at the August meeting too. But if you think about the headwinds that we've got facing the consumer in the UK, and of course firms as well, we've got now energy price increases, which could be quite substantial. We've got tax increases as well in the form of national insurance hikes from next April. That's a lot of headwinds, and I really do fear that the hit to real incomes could mean that we've got weakened demand in the UK going into 2022, and that could really affect what the Bank of England do. So we're not expecting an interest rate hike for the Bank of England to 2023, and I think that adjustment's got to come through into the market, and that could mean there's some real proper headwinds for sterling into the new year.
So what's your call on sterling by the end of the year or into 2022?
Well, to be fair, since the start of the year, I've had a call for the end of the year for euro sterling at 0.84. But dependent on the outcome of this Bank of England meeting, I'm getting far less confident that sterling is going to be able to hit that. I think I'm about to revise my sterling forecast to make sterling weaker, and of course that will come through into cable as well. Now I am a little bit of a dollar positive. I do have a dollar positive outlook, so again that will impact cable. But I think cable's going to really struggle now to get up to 138, 139 again before the end of the year.
Jane, if I look at Bitcoin, it's been retreating to some of the lows that we touched in August. As I guess, this kind of goes back to the picture of some of the anxiousness we've seen in markets overall.
Yeah, I mean, I think we've got to, look at Bitcoin and the other cryptos really as an asset and a volatile asset and a risky asset at that. And when you see the sort of concerns in the market that we've seen in Asian stock markets that we saw yesterday, even in the widening in peripheral spreads, I think that is a signal that some of these other the cryptos and the other risky assets will also be under pressure. So again, I think Thursday, at the end of the week, if the market gets a stronger signal about whether or not we are going to have more contagion from Evergrande, that will also be a signal for Bitcoin.
Jane, thank you so much. Jane Foley there, head of FX strategy at Rabobank, talking about euro sterling, talking about renminbi, and of course also talking about Bitcoin. Now coming up, the U.S. set to reopen its borders soon to most foreign travelers as long as they're fully vaccinated against COVID-19. That story is up next. This is Bloomberg.
If government was doing it by itself, you wouldn't have the breadth of expertise you need. So our expertise, the company's expertise with the governments, are taking a lot of recovery money. Europe, has committed a lot of capital. The Congress is debating substantial money in the two different bills there that, if those go through, will allow this effort to go full speed.
We're not doing this to make money. We're doing this to seed these ideas, to rapidly accelerate ideas, and hopefully one or two or three or many more ideas turn into real substantive ideas. And if they need a different types of rounds of financing because it's real, at that time maybe we could bring in client money. This is really meant to seed ideas, seed new technologies, to rapidly move forward. And the more we could move this forward, the faster, in my mind, we could have more client money to invest side by side.
Well, that was BlackRock Chair and Chief Executive Larry Fink and Bill Gates speaking exclusively to Eric Schatzker about their breakthrough energy catalyst program set up to accelerate the commercial viability of solutions to the climate crisis. We're talking about pricing. Now let's get straight to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. The UK won't bail out companies afflicted by its power crisis, and the government expects to see some businesses go bankrupt in the coming weeks. That's according to Business Secretary Kwasi Kwarteng. He also said Britain's energy price cap protects millions of consumers and will remain in place. Gas prices have already more than tripled this year. ConocoPhillips has agreed to acquire Shell's Permian Basin assets for $9.5 billion in cash, accelerating consolidation in the largest U.S. oil patch. The deal will give ConocoPhillips an additional daily production of around 200,000 barrels of oil equivalent, making it one of the Permian's biggest producers. Shell will distribute $7 billion in proceeds to its shareholders. Japan's biggest lender plans to sell the retail arm of its U.S. banking unit to U.S. Bancorp. Mitsubishi UFJ will receive cash and Bancorp shares in the deal. According to Nikkei, the agreement to sell MUFG Union Bank could be worth about $7.3 billion. That's the Bloomberg Business Flash. Francine.
Thank you so much, Laura. Now, the U.S. will reopen its borders soon to most foreign travelers as long as they're fully vaccinated against COVID-19 in a sweeping reform of strict entry rules. Now, Air France KLM Chief Executive Ben Smith says his company is really happy about the changes.
40% of our capacity and our revenues in 2019 were destined to and from the U.S. So it's fantastic news for our group, Air France KLM. And based on what we saw this summer, once the intra-European borders open, we expect a return of traffic numbers from 2019 to move forward as close to those dates very quickly.
Well, over in Dubai, Emirates Airlines plans to ramp up flights as travel restrictions ease further and head off the start of the next week's expo. Now, the airline aims to restore more than 90% of its pre-COVID frequencies to the States by early December. Now, joining us to talk about all of this is Bloomberg's transport reporter, he's Sid Philip. Sid, thank you so much for joining us. I mean, this was very exciting, not only for the newsroom, but a lot of business people and, tourists in general. What's driving the exuberance in some of these airline stocks?
So, especially for the European network carriers, this is a massive move because it was their most profitable route until the pandemic decimated traffic. And airlines are desperate to get travel going again on the US routes. I mean, unlike the US airlines that have large domestic networks, European network carriers don't have that luxury, so they're desperate to get the most profitable sector going again.
So, I imagine that the airlines just couldn't be happier about this. Is there a risk that there's a green light and then they go back to actually, it's not as simple as we thought it would be?
So the airlines have been lobbying for this since the start of the pandemic to restart travel. I mean, President Trump banned travel from Europe and the UK back in March 2020. And airlines have been lobbying for it ever since. There is still some question marks about which vaccines will be approved, as well as when the move will actually get into place and what the restrictions will be with regard to PCR tests. But for now, airlines are saying this is great news and they can't wait for this to start.
And Sid, so what do we know about the network carriers that will benefit the most? So is an IAG better placed than a Lufthansa?
Absolutely. I mean, at the moment, it really depends on the European travel rules and if there's a third wave in the UK. But as things stand, we will see the likes of British Airways, which was the biggest carrier on transatlantic routes, as well as carriers like Air France, Lufthansa, and others that are big players on the transatlantic route, as well as Delta, American Airlines, and United, all benefiting from the reopening of travel.
And Sid, are airlines hoping that it will leave more to business travel, which is, where they make the big bucks?
Absolutely. I mean, the front of the plane is where airlines make all their money, and that's where they're hoping to get business travel going again now that the US has lifted the ban on travel from Europe and the UK.
So I mean, the million-dollar question is actually who's allowed to go, and there's a little bit of confusion. Does it feel that maybe, the Biden administration said they'd open without fully looking at the details? I don't know whether it's pressure because of UNGA, because he's meeting actually with a lot of European leaders.
Yeah, at the moment it's a bit short on details, and the White House has promised that they will give us details in the coming weeks. But since this does take effect in November, so there are still some weeks left before that actually kicks into place. And I think airlines will be looking very closely at what the details are as far as what the rules and what the vaccinations are before they can actually get completely confident about travel restarting.
Sid, thank you so much for joining us. Sid Philip there, our transport and aviation expert. Now, coming up, the end of LIBOR is fast approaching, but its leading heir has so far got little traction. So up next, we talk life after LIBOR. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, the UK joins Europe's green debt rush, and it has attracted a record £90 billion in orders on its debut. This is 6 times more than the country is planning to sell. Now, the pricing will be closely watched in a hot market for ethical debt, where sellers often shave a few basis points off their borrowing costs. Now, for more on that, we'll be speaking to John Glenn, the UK's Economic Secretary to the Treasury. Don't miss that conversation. It's at 4:30 p.m. London time, 11:30 a.m. in New York. I think he'll also talk about equivalency and, of course, life after Brexit. Now, the next milestone in the demise of LIBOR is also fast approaching. From January 2022, new loan sales cannot be tied to the benchmark. However, the leading heir for U.S. dollar loans, the secured overnight financing rate, has so far gotten little traction. Now, the New York Fed has raised the alarm, saying the transition is not where it should be at this point, especially in the syndicated loan market. Well, joining us now for all of this is Bloomberg's rate editor, William Shaw. Will, great to have you on the program. So why are regulators now concerned about the syndicated loan markets?
Hi, Fran. So there's not very much time left, in short. So firms have got about 3 months until the end of the year when they've got to stop issuing syndicated loans linked to LIBOR. That's a very big market. We know it was worth about $2 trillion as of March this year, and progress, frankly, has been slow. We know that Ford and Sanderson Farms have both been able to access syndicated loans linked to the main LIBOR replacement SOFR, but apart from that, there appears to have been very little activity.
So, Will, what is the Fed doing about it?
So the Fed has been intensifying its rhetoric against the firms which are lagging behind. So we've heard a senior executive from the New York Fed complaining about inertia and saying that firms that are still issuing these products after the end of the year will be viewed as creating safety and soundness risks. So they're starting to pile the pressure on.
So will it do the trick, Will?
Well, I mean, that's the question. So people in banks, nobody wants to have the Federal Reserve breathing down their neck. And it's not the kind of thing that's going to ingratiate people with their bosses inside banks if that's happening. Having said that, this is like ultimately a problem that goes a little bit further than the Federal Reserve's mandate, because there's reluctancy amongst the borrowers also to use these SOFR loans. And there's very little that the Federal Reserve can do about that at this stage. I mean, one thing that we can say for certainty is there's no indication at this point that year-end deadline is going to get pushed back.
Great. Thank you so much, William Shaw, there with the very latest on LIBOR, life after LIBOR. Now, this is what the markets are doing overall. It does seem like it's definitely a bit more of a positive day than what we had yesterday, which was a pretty hefty correction. This is what we're looking at, excuse me, today. So the focus, of course, on FOMC, it starts today, but really the big news will be tomorrow. The focus also on Evergrande. Now, if you look at U.S. futures gaining, suggesting some improvement overall in sentiment after some of these concerns about the fallout from China's Evergrande debt troubles roiled the markets. Now, we did also see dip buyers. This is what our Eddie van der Vaart was pointing to in the last hour of trading on Monday. It did help yesterday the S&P 500 pare some of the losses, though the index actually still posted the biggest drop since May. Now, today, look, it's the beginning of the two-day Fed meeting. Policymakers, of course, expected to start laying out some of the groundwork for paring some of the stimulus. Treasury yields rising, the dollar pretty much steady. One of the other pressure points that we're looking at is also maybe what's happening with cryptocurrencies, because there are still concerns about developers. For example, looking at real estate firms in Hong Kong, they're steady, but there's still a little bit of anxiousness about what's happening with Evergrande, and concerns remain about broader contagion. Also, after S&P said, for example, Evergrande is on the brink of default. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kaylee Lyons will be in New York. We have a number of newsmakers also to talk about the German elections. We're 5 days away from that. We'll talk about valuations. We'll also talk about travel, unrestricted for the vaccinated, early November between Europe and the US. This is Bloomberg.
If China had a hard landing, that would have very serious consequences for the rest of the world and for the United States.
I suspect the impact will be limited because the government can always step in to avoid contagion to the Chinese financial system, but there's a clear message that they want to clean up the bad debt that has been plaguing the system for a while.
I don't think it's going to be Lehman. I think, if anything, it's going to be more like long-term capital management, which blew up in 1998 and was very quickly bailed out.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lyons.
It's 10 a.m. here in London, 11 a.m. Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Tuesday, September 21st. Our top stories today. Evergrande on the brink. S&P Global Ratings warns that the struggling Chinese property developer is on the verge of default. Markets stabilize as investors look to the Fed. Policymakers begin their two-day meeting preparing to gradually roll back stimulus. And risky business on Capitol Hill. Democrats head towards a showdown with Republicans over the debt ceiling and a bill needed to keep the government from closing down. Now, there is quite a lot of market news. Buy the dip is how we explain markets that sold off, Kaylee, but now are in the green. And we also have headlines from the OECD.
We do. They just published their new interim outlook, Francine. They have hiked their 2021 and 2022 inflation forecasts for the U.S., the Eurozone, and the U.K. The OECD also saying near-term inflation risks are to the upside. They see the G20 inflation rate at 3.7% in 2021 and 3.9% in 2022. So we will continue to analyze those headlines for you. Now, as for what we saw in the Asian session overnight, as Francine said, you did see some buying of the dip. Now, keep in mind, China, South Korea, Taiwan all still have holidays. Japan, though, opened back up from a holiday and plunged to the downside by about 2%. A little bit of catch up to yesterday's selling that, of course, was spurred by contagion fear around China Evergrande. That said, we did see a bounce in Hong Kong equities. The Hang Seng actually up about 0.5%, and the property sector within that also rose by about 2%. That said, Evergrande did still fall about 0.4% in the session. Of course, S&P Global Ratings warning overnight of a probable default, saying that it is unlikely that China steps directly in to help the property developer. All of that, of course, putting continued pressure on Evergrande's bonds as well as its equity. And we did see Asia dollar bond spreads widening out by about 3 basis points to the widest in about a month. I just also wanted to point to iron ore futures in Singapore falling for a 10th day, but the pace of the fall is moderating. Futures only down about 0.3% in the overnight session at 93.25. Now, as for the picture here in the U.S., of course, it was a deeply negative day for the S&P 500 at one point in the lows of the session yesterday, down 2.9%. But you did see that dip buying coming into the close. The index only ended the day lower by about 1.7%. And the buying of the dip is continuing this morning with S&P 500 futures up now by about 0.9%. Of course, we did see a big spike in volatility as well yesterday. Ended the day at a 25 handle, which was the highest going back to May. But the VIX coming in a touch this morning at 22.79. You are seeing some selling in the bond market, the 10-year yield up about 2 basis points to right around 133. And then I would just point to Bitcoin. Matt had a really rough day yesterday, down 8.5%. And those losses are continuing this morning, down about 0.8%, trading just north of $43,000, Matt.
Right. A little bit of a recovery, right? Because Bitcoin was trading below 43,000 overnight. And we did see Ethereum also trade down. It's back up over $3,000, Kaylee. That's the level to watch on Ethereum, and I think Ethereum might be the coin to watch right now. Take a look at European markets. Speaking of buy the dip, you see the green across the screen here as well. We've got a lot of individual movers to talk about, but generally the markets are bouncing back from the 2% losses that we saw yesterday. So you can see the gains are stronger in France, Germany, and Portugal, but we're up across the board. And we're also looking at European debt that hasn't fallen any further. In fact, the yield coming up a little bit to negative 31 basis points. We were at these levels yesterday, but we haven't come down, which I think is interesting. So investors are feeling comfortable enough to sell off those 10-year bunds. You see the pound right now gaining, but still under 137 at 136.81. And Vivendi really is the story of the day, I think, here in Europe. In terms of individual stock stories, it spun off Universal Music Group. Those shares now trading in Amsterdam, and they're up about 40% from the reference price. 18.50 was the reference price. I think they're trading about 26 today, but Vivendi shares soaring as well, and it's a much bigger company, right? We're talking about a $12 billion company adding a fifth to its market cap. It's a really interesting story, as well as the airlines, Francine. There's so much talk about consolidation in the airlines that we see IAG as a big mover as well.
Yeah, and also the travel restrictions actually easing between the U.S. and Europe, the most lucrative route, especially if you get business, well, apparently November 1st, and that's also filtering through euro-dollar possibly. We expect Bank of England on Thursday. Now, a look at what else is happening today. U.S. President Joe Biden plans to deliver his first speech to the United Nations General Assembly in New York. This is part of his efforts to re-engage with the international community. The Greenwich Economic Forum Investment Conference is held in Connecticut, while speakers include Bridgewater co-chair Ray Dalio and economist Nouriel Roubini. And then JP Morgan Chase launching a digital retail bank in the UK today, the first step in the firm's plans to expand its consumer business overseas. We'll have plenty more on that story throughout the day. Now, Evergrande concerns mounting, experts sharing their thoughts on the crisis with Bloomberg.
Evergrande is just the latest negative for investing in China.
We think is that there is quite unlikely to be a systematic risk.
Stand prepared to respond appropriately if needed.
I think at this point it's really premature to reach that conclusion, though.
Between greed and fear, we're actually becoming a little more interested in taking risk.
Now, Bloomberg's Tom McKenzie joins us with the very latest. Tom, so we talk about Lehman Brothers moment. No one really thinks it's a Lehman Brothers moment, but actually, if there's a default, we don't exactly also know how far and wide the ramifications could go.
The truth is we don't, because it's an incredibly complex business and its liabilities are very difficult to pin down and bring transparency to. But you're absolutely right to say that the consensus view is that we don't get to a Lehman Brothers moment for China. Certainly that's the line from Citi. They say that ultimately regulators will step in to prevent systemic risks to the economy. That's their bottom line. You had S&P as well coming down, downgrading even further into junk territory this company. Not a big surprise there, given what we've seen in the bond pricing, particularly offshore. That's been telling us a long time that a default is very likely. That's what S&P have said as well. But they're also concurring with Citi and saying that, look, ultimately, this company can fail and the government will be able to isolate the risk from the rest of the economy.
Tom, what caught my attention earlier this morning was Bank of America downgrading its China growth forecast all the way out into 2023. And in part, they talk about the property crackdown, but also the crackdown in terms of shutting the country down because of the Delta variant, and then also the commodity crackdown and part of decarbonization efforts. If all of those things contribute to slower economic growth overall, does that not run counter to the pursuit of common prosperity?
Well, that's a very good point. Does it? And should we expect further downgrades from some of the other investment banks out of there? As you say, Bank of America coming out, taking a very long-term view, 2021, 2022, 2023, downgrades across all of those forecasts. 8% is what you're looking at for this year, they say, down from 8.3%, 5.3% next year, down from 6.2%. Absolutely. Look, particularly when you look at the real estate sector that is so significant in terms of the contribution of growth to China, about 20%, depending on who you're talking to in terms of the amount of GDP that concentrates on. Then you have the crackdown on technology. You have the crackdown then on the raw material space, the industrial space, because of their concerns about carbon emissions. And you make a very good point. What does this mean for jobs? What does it mean for closing that wealth divide? Is this something that regulators and the government officials there in Beijing are aware of, and how they're going to square that circle? The point from Bank of America is that this is a broad-based slowdown you're looking at now because of the number and different areas that you're looking at. Just the COVID restrictions, but also that carbon neutral push, and of course what's happening in the property sector. Again, we should be looking for further downgrades possibly from some of the other houses out there as they reassess the impact on China's economy.
Well, in common prosperity, certainly. Tom, thanks so much for joining us. Bloomberg's Tom McKenzie talking to us about China. You can watch our special coverage, the Evergrande Effect. That's Thursday at 9:30 p.m. in New York, Friday morning at the China Open for our viewers in Asia. Now, yesterday's late afternoon bounce in U.S. stocks came amid a trading frenzy in futures contracts. Options trading was also seen as fueling the intraday recovery. Let's bring in Danny Berger for more. Danny?
Matt, I love this. You're letting me get wonky about yesterday's price action. And I think it makes a lot of sense to do this. Begging me. I wish you did that every day to tell me to get wonky. Well, look, about yesterday's trading, any of traders will typically tell you pay attention to the last hour, last half an hour of trading. This tends to be important because this is a more liquid time during the day. So if you're an institutional investor and you want to take action, you typically will do that. So yesterday's price action, Kaylee, you mentioned this earlier, that at one point it was down nearly 3%. But then we get this late in the day bounce. And what that might tell us is institutional investors were buyers at the end of the day. They decided to go in and buy the dip, and indeed we're seeing that today. So that is a positive sign that perhaps, at least for that, if you will, smart money, the worst is over. Now, options trading also tells us something interesting as well. Let's switch up the boards. And of course, we have our radio listeners. So I'll describe the chart I'm talking about here. This is put and call volume combined for the largest S&P 500 ETF. If you check out the price action yesterday, volume on this ETF, again, for our radio listeners, it's just a big spike up here. Option trading was more or less frenzied. Now, part of that is the bearish options puts, which means that perhaps people were trading in their puts, their hedges were paying off yesterday. But also, out of 9 million of these traded, about 4 million of them were calls. So people were actually going into this market and buying bets that the market would go up from here.
Okay, so maybe option traders contributing to the buying, Danny. Let's talk about who was contributing to the selling. JP Morgan has one theory.
Yeah, so this comes from JP Morgan's Marko Kolanovic. Sometimes he's called the Gandalf of markets because of his ability to call some of this stuff. You know, take that what you will. But his thoughts yesterday were essentially that volatility type funds were contributing to the sell-off. That there are these funds that when markets are more volatile, especially cross-asset volatility, they'll start to sell. So he says yesterday a lot of that selling was due to those quant type funds. So if you're a fundamental buyer, you shouldn't be scared from yesterday. In fact, you should go in and buy what the market did yesterday. Charlie McElliott over at Nomura says something similar as well, that it's volatility strategies which really contributed to the selling.
All right, well, we're certainly seeing the dip buying continue this morning. Thank you so much to Bloomberg's Danny Berger. And now to Washington. House Democrats have unveiled legislation to fund the government until year end and suspend the debt limit through 2022. It's part of a must-pass spending bill needed to keep the government open past the end of this month. Joe Matthew, Bloomberg Washington correspondent, joins us now from our D.C. bureau. So, Joe, this is a risky gambit on the part of Nancy Pelosi and Chuck Schumer. Just how high are the odds that it backfires?
Pretty high at this moment as we stare down what is now a countdown of 9 days until a possible government shutdown. And no one actually expects that to happen. No one's predicting it. But we are apparently playing some games here in the meantime. This could have been put together a couple of weeks ago. And as we do head for this potential collision course, the Democratic leadership has decided to put a debt ceiling measure inside this government funding resolution that's going to be up for a vote within days here. Not increasing the debt ceiling, to be clear, but suspending it straight through the midterms. They're trying to hang this around the debt itself, around the necks of Republicans who say they will not move on the debt ceiling. Mitch McConnell has been in lockstep with his members on this. It's likely that this would die in the Senate once it gets there. But again, Democrats want to make a point. Chuck Schumer calling this the dine and dash of historic proportions, suggesting that Republicans went on a spending spree under Trump, and now they don't want to pay the credit card bill. This could evolve quite a bit, though, in the next couple of days, and it's likely that Democrats will end up with a standalone bill in dealing with the debt ceiling.
Joe, talk to me a little bit about President Biden at the General Assembly. So how much pressure will he come under from allies? I mean, the French are furious. The Brits aren't far behind to show that actually the U.S. is back for its allies.
Yeah, there's quite a bit of pressure here, considering the withdrawal from Afghanistan, considering the flap with France over the Australian submarine deal. The president making his first address to the General Assembly today. He'll do so this morning. And will call for unity, of course, and a reestablishing of alliances. But that's kind of a difficult case to make with the news that we've seen over the last couple of weeks here. Interesting, though, how brief the stay will be for President Biden. His first trip to UNGA. And in this case, he's going to be wheels up by about 2 o'clock in the afternoon. All of this is because of COVID. Only got about 1,000 delegates there in town for this because there are concerns about it being a super spreader.
And yet the traffic seems to be just as bad as ever. Thank you so much to Bloomberg's Joe Matthew. And of course, you can listen to Joe every weekday on his radio program, Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. And let's get back to the markets now and take a look at some stocks moving in pre-market trading here in the U.S. There's an unusual one moving to the downside. That is Discovery, but the Class B shares. And this is interesting because they're almost entirely owned by just one man, John Bellone. And yet yesterday, we saw the shares up 45% in the Monday session. And today in pre-market trading, they're down about 10.5%. So interesting price action to keep an eye on. Another stock moving to the downside is Lennar, of course, the home builder. It reported after the bell last night, and it missed its own expectations expectations due to the supply shortage, both in terms of actual raw materials and labor. That is really weighing on home builders, and its outlook, of course, also disappointed. That stock down about 2% in pre-market trading. And finally, we also got a deal announced after the bell yesterday. ConocoPhillips buying the Permian Basin assets of Royal Dutch Shell for $9.5 billion in cash. Now, Shell is going to pay out $7 billion of that to its shareholders, but Conoco, for its part, will become one of the biggest players in the Permian Basin, adding 200,000 barrels to production. That stock is higher by the better part of 1% before the bell, Francine.
All right, Kaylee, thank you so much. Kay Lines there with some of your biggest movers, and we'll talk about DIY. People don't believe I do DIY, but just FYI, Matt Miller, I build all of the furniture in my house. Coming up this hour, we talk equities. I do. Peter Oppenheimer, Goldman Sachs.
You go to IKEA and you get, does Charlie help? I mean, how does that work? Or do you build it from scratch?
I don't buy, I just build. Me and the 9-year-old. We next time actually we'll time it and post it on social media. There you go. We'll talk about DIY stocks as well with Peter Oppenheimer of Goldman Sachs. This is Bloomberg.
I think, the Federal Reserve certainly understands that China is an important player in the global economy. If China had a hard landing, that would have very serious consequences for the rest of the world and for the United States. I think at this point, it's really premature to reach that conclusion, though. The Chinese have tried to tighten things up before, and when it starts to actually affect the rate of growth and employment, they tend to ease off on the brakes, and I think that's what's going to happen this time as well.
Well, that was Bloomberg opinion columnist, senior advisor to Bloomberg Economics, and former New York Fed President Bill Dudley. Now let's get straight to Noor Al-Ali of Bloomberg Markets Live. A lot going on, Noor, so thank you so much for coming on. How much is the focus on China and Evergrande and possible defaulting of that? And how much is it on actually FOMC and how they view China?
Oh my God, yesterday was a crazy day. I mean, everyone was talking yesterday whether or not, is it Evergrande, is it FOMC, is it just the week that everything's going to fall apart and crash? This morning says, well, you know what, not really. The buy dippers are the back, as we've just seen from Danny earlier. But realistically, what's happening in China here is more of a question of, I would say, more controlled bushfires from the Chinese government. This is not a 2005, 2011 property crash in China, at least.
Noor, I've been getting questions about the fiscal cliff and the debt ceiling. Is that as important as Evergrande? I mean, when you look at yesterday's big sell-off in the equity markets, was it all the Chinese property developer, or could it have been the U.S. budget as well?
Well, I mean, if you were reading the markets in the weekends, as all of us are, of course, and you have an op-ed from Yellen saying, oh my God, the debt ceiling, please pay attention to this. Obviously, you're going to come in on Monday and think, risk, I need to go to havens, I need to go to the dollar, I need to go to the gold, I need to go to the yen, and so forth. And that's where we saw it there. But realistically, it's the debt ceiling is being used as a political hot potato subject in the United States. And I'm not really sure it plays on the long run. I mean, definitely it is a point of interest, but markets understand what politics are like. So
yeah, we've seen this movie. We've seen this movie before. Just quickly, how much do technicals matter in the equity market right now? Because we saw some bouncing off of moving averages yesterday.
Quite a bit. Yesterday I was talking to one of my colleagues and I said, you know what, to be a retail investor today, you need to be really smart when it comes to technicals, whether it's, gamma hedging or options trading or anything of that sort. And you see a lot of these YouTube videos right now. I mean, we've had this really great story last week about FinTweet really taking off. So realistically, when it hits a daily average, and I'm sure Matt will tell you this, I mean, if it hits a 50-day moving average or anything of that sort, you've got a lot of these quants coming in and selling and buying. But does this really reflect the market sentiment? I'm not so sure.
Yeah, as soon as you throw in some of the Greek names and some of the technical analysis, Noor, then that's when markets get spicy. Noor Al-Ali there of Bloomberg Markets Live. Now we'll have plenty more, of course, on markets. And if you want to follow all of the great analysis from Noor and her team, just go to MLIV Go on your Bloomberg terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines in New York with Francine Lacqua in London and Matt Miller in Berlin. Now let's get the first word news. And in Canada, Prime Minister Justin Trudeau won a third term in a snap election. But he fell short of regaining the majority he was seeking. That means Trudeau's Liberal Party will have to rely on smaller parties in order to get legislation passed in Parliament. British Prime Minister Boris Johnson says President Biden has too many domestic priorities to find time to negotiate a trade deal with the UK. The two leaders meet today in Washington. A trade agreement with the US was billed as one of the prizes of Brexit. Johnson says he would rather have a good deal than a quick one. And shares of Universal Music Group soared by as much as 43% in their stock market debut today. UMG was spun off from French media company Vivendi. The stock began trading days after the U.S. recorded music sector reported strong sales growth driven by a surge in streaming audiences. Francine?
Yeah, I know our Matt Miller was all over this Universal shares soaring after this $39 billion debut, Matt.
Yeah, I actually have to point out, I saw Vivendi shares down 65% earlier because the spin-off of Universal Music hadn't been correctly accounted for. Now, of course, it's up 22%. Just a quick surveillance correction. This is Bloomberg.
This is Bloomberg Surveillance, Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lines in New York. Matt, of course, a lot of the focus is on Evergrande. We're buying the dip where the market is, which is usually a fancy way of explaining why markets are up when fundamentals haven't really changed.
Yeah, I mean, we still don't know exactly what's going to happen with Evergrande. You were talking about that with Kaylee and Tom earlier. We think they have, $300 billion in liabilities, but you don't know the counterparty risk and how that plays out. Nonetheless, looks like the market thinks yesterday's drops were a little overdone. And I think it could have been other factors as well playing into that. You heard Danny talking about Gandalf, and you also have heard us reporting on the possibility that the infrastructure deal doesn't go through. Also, Janet Yellen's concerned about the debt ceiling. So there's a lot going on in these markets to pay attention to.
There is, and it's playing out in the markets today as well, Kaylee.
Yeah, absolutely, Francine. I would add to that list Matt just went through. We have a Federal Reserve decision coming up tomorrow at 2 p.m. Eastern time.
Good
so
point.
that could be a major market event as well. Even still ahead of that, as both of you two alluded to, we are seeing some pretty strong dip buying coming in on this Tuesday session after yesterday's steep losses. Right now in Europe, the stock 600 is higher by the better part of 1%. Pretty much every single sector, indeed every sector within that index is in positive territory. And S&P 500 futures are up about 0.8%. Of course, yesterday we saw some pretty strong dip buying in the last hour of trading, and it does look like that dip buying is continuing again this morning. Of course, 10-year yield sitting right around that 133 level ahead of the policy decision tomorrow from the Federal Reserve. That's up about 2 basis points. And then I just wanted to point to oil as well, also contributing to a rebound today, up about 1.5% on WTI. Of course, you still have the same supply side issues in oil, continuing to see the recovery, the slow recovery from the disruptions of the hurricane. So that is giving a lift to crude this morning. Now, of course, we are seeing some other commodity-related equities higher in pre-market trading as well. Occidental Petroleum is benefiting from the rebound in oil, and also news we got overnight that it has repaid $1.3 billion in debt over the last 2 months. That stock is up 2.5%. And then you have some stocks tied to materials and metals with the rebound in metals prices. You have Cleveland-Cliffs, Freeport-McMoRan, and U.S. Steel, all higher between 1.5% and 2.5%, Matt.
All right, you know what I'm watching, Kaylee, today? Really paying close attention to the SPOOs. That's what the pros call the S&P futures. And you can see a chart here. I'll welcome those listeners on Bloomberg Radio who can't see it. Thank you for joining us. I'll walk you through it. A chart of the S&P futures over the last year, constantly coming down and testing the 50-day moving average, breaking it a little, but then bouncing back as investors buy the dip. Now, yesterday, what we saw was the S&P futures going down through the 100-day moving average. It's the first time I've seen that in over a year now, and we quickly came back. But I think it begs the question, what drove the bigger than usual sell-off? Joining us today from the Goldman Sachs Berenberg 10th German Corporate Conference is Peter Oppenheimer. He is Goldman's Global Chief Equity Strategist. And Peter, there's so much talk about Evergrande. Obviously, it's the hot, new-ish story, but there are other issues. As Kayleigh pointed out, the Fed is meeting tomorrow. We have concern that maybe the infrastructure deal won't go through or possibly won't go through in full. And then the debt ceiling. What do you think drove yesterday's sell-off?
Yeah, look, I think you're right. It's really a combination of factors that at the margin have made investors a little bit more worried about the mix between growth and inflation, policy support, and the pace of activity. Certainly, the developments in China have sort of raised a degree of uncertainty because at this stage, people don't really know about the potential systemic effects, and that always creates a sort of risk premium event. But to your point, I think also the uncertainty about the prospects for the infrastructure bill, the debt ceiling, and the size of the fiscal package are really quite important as well. Bearing in mind this is coming at a time when we're seeing some significant inflationary pressures and the surging in energy prices, gas prices in particular, and all of this has sort of led after record rises in risk assets in many equity markets to a bit of concern. On the fiscal package itself, we do expect that the size of it will be scaled down from $3.5 trillion to $2.5 trillion. And there's some question about how big a rise in taxes will come as well. And we're expecting a package of about $1.5 trillion in terms of tax increases.
How much of a problem is that then, Peter? I mean, we've talked about the fiscal impulse to GDP growth. It's been massive over the last 4 quarters. Yeah. If we reduce fiscal spending, and of course this package is spread out over 10 years, and raise taxes, how much of a problem is that for growth in the United States?
Well, again, this is all about perception at the margin relative to expectations. You know, we think we need to look at the context. We've seen a massive rise in equity prices from the trough levels of the pandemic in March of last year. A lot of that reflected extraordinary policy support, both the moves towards zero rates and the ramping up of quantitative easing, which itself is about to start moderating, and a massive fiscal boost in the US and other places, which we're beginning to see probably scale down as we move forward. And certainly, as you say, the fiscal boost that we've seen is going to be fading. So the combination at the margin is certainly less supportive for growth, and markets have already priced in a lot of good news. So I think on that basis, it's understandable that we should be seeing some volatility, perhaps some modest pullback, but over the medium term, probably lower returns at the index level as that growth, inflation, and policy support mix becomes a little bit less favorable.
So, Peter, in terms of Evergrande, what is the market pricing it? If there is a default, are we going to see a repricing of equities, or is part of the bad news already priced in? We don't really know what kind of liabilities they have or exposure.
Yeah, so we're in the sort of point of maximum certainty because we don't know about the exposures, and obviously there's some memory here, memory muscle from previous experiences of defaults and the systemic effects that they can create through the banking system. But you know, a lot has been priced in now because this is coming after what we've seen already as a major derating in lots of Chinese assets on the basis of you know, interventions from the government. I think the risk premium has increased there quite a lot, and we've already seen quite a big slowdown, of course, in the Chinese economy, a tightening of policy there. And I think the big issue from here will be whether there are any sort of counterbalance, sort of more systemic risks coming from that, and also what the policy response will be, whether there'll be an easing of policy after quite a period of policy tightening in China over recent months. And that may well begin to calm fears, given how much I think has been priced in now on that particular issue.
Peter, what do you do with commodities and actually the commodity sector as a whole? I mean, I know you talk about in your note about a big dislocation from fundamentals, but then there's big concerns about energy prices.
Yeah, and I think that, you know, our commodity analysts have been for some time and continue to be really quite bullish of commodity prices. I mean, in effect, what we've been seeing is years of underinvestment for lots of reasons. low prices and also the shift towards decarbonisation as a priority from a policy perspective, but matching a point where global demand is picking up a lot, and that's just simply squeezing prices higher. You've got specific issues with gas supply, in particular in Europe at the moment, for obvious reasons. But generally speaking, we think prices are going to remain pretty strong. We have, the outlook for still quite strong oil prices. We think that metal prices, which have come off a bit, are going to rebound again. Copper in particular has a very strong secular story. We're looking at $11,500 for copper over 12 months, and more beyond that as we get a shift in the energy mix towards more electricity demand and consumption.
That's the relationship between commodities and your equity allocation, Peter. What about rates? Do you expect we're going to get higher yields by year end?
In terms of bond yields, yes. We've already started to see that. And we felt that bond yields should be rising, not just simply because of the prospects of somewhat higher inflation. Some of that we think is going to be temporary, but also because of the shift in focus of central banks towards gradually pulling back some of this emergency support. So, we expect 10-year Treasury yields to be around 1.6%, for example, as we move towards the end of this year. We've expected a pickup in German bond yields and European yields as well, and I think that process will continue.
Peter, finally, if we get a 10% correction in the equity market by the end of this year, is that a dip you want to buy?
I would say it is. I don't think you can rule it out. Clearly, as I said, we've seen huge rise in expectation of very positive recovery from this pandemic. But fundamentally, we're still in the relatively early stages of this economic cycle. And even as we get an adjustment in this emergency policy support, rates in real terms are still extraordinarily low, still negative, and we're still getting reasonable profit growth. So I think that, if we get a 10% correction, I think fundamentally that's probably a good time to be getting back in, although we do expect much lower returns on a 12 to 24 month forward basis than we've seen over the last year or so.
Peter, thank you so much for your insight and wisdom. As always, Peter Oppenheimer, their Chief Global Equity Strategist at Goldman Sachs. Now, coming up, German election, 5 days away, Ursula Munch, Academy for Political Education Director. We'll talk to her about the polls and the coalitions. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, Ray Dalio, Bridgewater Associates co-chairman and co-CIO from the Greenwich Economic Forum. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacroix in London. Bookmakers are favoring the SPD's Olaf Scholz to become the next German chancellor, with the most recent odds slightly rising from last week. They also expect the most likely coalition outcome to be a so-called traffic light coalition with the SPD, the Greens, and the FDP, the Liberals. Let's get more on this with Bloomberg's Maria Tadeo. Maria, momentum seems to be with Scholz and his party when it comes to stocks. What are the potential losers, the potential winners here? I don't think Maria can hear me.
Matt, when you look at this election...
You hear me? You hear me?
Yeah, no, I can hear. Can you hear? Yes,
good,
I
good.
do.
Okay, so what do you think about the stocks, the stock reaction that we're going to see here?
Well, you know, Matt, without getting too specific on the names, you know, there are themes going into the election. One, of course, is that both the SPD and the Greens, they could be forming the next coalition, have said that they want to modernize the economy and focus on green and digital. That clearly opens a window of opportunity for renewable energy in this country. The Liberal Democrats, by the way, they also say that Germany needs to invest in future technology, and that could also mean cut and tape, for anything that is telcos and the technology space. On the flip side, Matt, a lot of analysts do say that they do see downside risks when it comes to German equities if we do see that red-red-green coalition, perhaps in areas like autos, aviation, planes, those are the obvious names, but also perhaps things like real estate. You know, that's a real conversation happening in places like Berlin, whether or not there's too much investment going into renting properties that then go on the market for too high a price. That's a real debate in Berlin, and particularly, I would say, however, that risk of a red-red-green coalition does seem to be minimal. Olaf Scholz has made it clear that his preferred partner would be the Greens if there is a coalition after Sunday, as we're expecting there will be.
So, Maria, give us a sense of actually, are there specific policies that markets are worried about?
Well, you know, Francine, more than worried, I would say the expectation and the focus for markets is very much on the spending and the fiscal plan coming out of Germany. You know, there has been a lot of hype going into the election that perhaps we would see this country moving away from that traditional German orthodoxy on, spending and kind of just sticking to the black zero. I would note, however, that both the Greens and the SPD, they say the country needs probably an additional 50 billion euros in spending. But the fact that this is going to be a coalition perhaps involving 3 different parties perhaps means that pushing on some of the most progressive, radical, some would argue, policies would require big compromises. So it's not even clear that we're going to see a spending spree, even if we do get a government that is led by the Social Democrats in power.
Got it. Maria, thanks very much. Bloomberg's Maria Tadeo talking to us about the reaction to potential outcomes. Let's get Ursula München here right now. She is director of the Academy of Political Education in Tutzing, Germany, to talk about the election. I feel like we need to explain, Ursula, to everyone outside of Germany what red-red-green is. That's because the SPD is represented by the color red, but so is the former Communist Party, Die Linke. Green is, of course, the Green Party. The possibility of a traffic light coalition would be the SPD, the FDP, the Liberal Party, which is represented by yellow, and the Greens, and then to the Jamaica coalition, because the CDU is black, is CDU, FDP, and Green. Just to get that out of the way, and we'll put that up on the screen eventually, but what do you expect as the outcome of this election?
Probably it will we will have a very close run, a narrow result, so that's quite sure. But I think, so in the meantime, I think 3 months ago, it was a different prognosis, but now I think really that Olaf Scholz will have the chance to form a coalition together with the SPD, the Social Democrats, and of course together with the Greens. And what we don't know, which third party will be member of this coalition. So you already mentioned he has the Social Democrats. They will have 2 options. The one option, Olaf Scholz is not too fond of this option, might to have an arrangement, a coalition with this left-wing party, the former Communist Party, but that's a long time ago, so they are no longer communists. But this is a very left-wing party, left Social Democratic Party. But that's not his favorite coalition. He would prefer a coalition together with the Greens and together with the Liberals. But the question is how to get the Liberals into this so-called traffic light coalition. We call it the Ampel coalition. The Liberals are not very fond of this idea. But there's one argument: they could prevent a left-wing coalition, and that might be the argument.
Ursula, give us a sense of how long these coalition talks could last. I mean, I've heard, the elections is Sunday. If we don't have a government or a proper functioning coalition until December, what kind of message does it send to Europe?
So that's the problem. So I think that's the main problem of these very unsecure coalition ideas, that it might take first a long time to clarify who talks to whom. So if we have a very close result, the Conservatives, the CDU, Armin Laschet, he could start talking and have coalition talks on his own. He could at least try it, or at least his party could try it. But if the result is not too close, then we will have quite soon, we will have the talks of Olaf Scholz. Of course, all of us, all Germans, we hope that it doesn't take too long, but we have already made the experience with the last elections in the year 2017. It took two steps to form a coalition, and we ended with a new government at the beginning of the next year, 5 months later. So that's, of course, not ideal.
Can I just ask you, the idea of forming a minority government and relying on the support of the AfD, the far-right party, clearly is now unthinkable in Germany.
No,
what about forming a
really
minority government? What about forming a minority government and relying on the support of the far left, the former Communist Party? Is that, for some reason, more palatable to the Germans?
That could happen, but I think that's not a good idea either. So I think we will see a traffic light coalition. I think that's quite realistic. It might take a long time, but I hope that we will have it until the end of the year because of Corona, because of the pandemic. Everybody knows that we cannot have to, that it doesn't make sense to take too long time. And we have another election at the beginning of next year. We need a new president for Germany, Frank-Walter Steinmeier. There is a decision needed whether he will be the next president too, or whether we will have a new president. So that's one other argument that the talks are not taking too much time.
All right, Ursula, thanks so much. Ursula Munch, there, Director of the Academy of Political Education. Now, Bloomberg's coverage of the vote in Europe's largest economy continues, of course, throughout the week and on Election Day. Sunday, we'll bring you live coverage and analysis as polls close in Germany this Sunday. Don't miss it, starting at 5 p.m. London time, 12 p.m. in New York. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin. Now look at what we're watching today, and I know, Matt, you're all over Universal and Vivendi.
Yeah, it's a huge story, not just because Universal Music now allows investors to get a piece of the Beatles, of Elton John, of Taylor Swift, of whoever Kendrick Lamar is, but because it's a $40 billion valuation for Universal Music. Now, Vivendi is what you're looking at right now. Vivendi is up 22%. This is a 12 billion euro company. I got to say, this morning, for our listeners on Bloomberg Radio, I looked at the move screen and I saw Vivendi shares down 65%. And, you know, my heart fell out of my chest. I immediately said to Tom McKenzie and Danny Berger, who were co-anchoring the show at that point, oh my God, Vivendi's down 65%. But what happened is the data feeds,
cool.
they said, what? You know, because it's huge. Cool. That's a massive drop. Vivendi was a $50 billion company. But what happened is the data feeds coming from the exchanges didn't calculate for the split just yet. So they showed that, although in actuality, Vivendi, which is a shell of its former self now, minus UMG, is actually up. And UMG is soaring in trading in Amsterdam.
Yeah, some of these quirks actually on these momentous days. I'm watching the UN General Assembly for, first of all, a number of reasons. The French are still furious, absolutely furious on what they heard in the sub deal. So it'll be interesting to see how Joe Biden navigates it. And then we hear also from the Chinese president at UNGA. Coming up, we'll talk business and investment.